Turning to India now, where the country's new annual budget unveiling some big spendings to revive growth in the pandemic hit economy. Let's get more with Tanvir. Was it as expected or any surprises in there?
Big surprises, Mandy, especially on the fiscal consolidation path and the number that they've delivered for FY21. And I'll walk you through that in a bit. But broadly speaking, many stakeholders are calling this budget a pandemic budget, essentially an expenditure budget that is likely to fuel growth. And the focus is really taking that chance on growth revival, reviving animal spirits and getting the investment cycle going. So that was the broad message. But this is how the fiscal consolidation path looks like. Accounting for the pandemic and how it's distorted the economic reality in India. So 9.5% is what they're going to be doing this year in terms of fiscal deficit, which is 3 times the original estimate of 3.5% for this year, 6.8% coming in next year, which is pricing in, of course, a growth in expenditure government spending by about 34%. And then the glide path over here means that for FY26, we are going to be looking at a level of 4.5%, a marked shift from the 3.1% expected as the normalized fiscal deficit number for FY23. So the pandemic has altered the course of fiscal consolidation. However, in fits and starts, there were good pieces in the budget that really got investors to sit up and take note. So the divestment program and the divestment drive there seems to be drawing a lot of interest. The $30 billion target has been rolled over into the next year with robust divestment pipeline, including paper like LIC, Air India, Concor, and BPCL. Not just that, also the reforms push is getting investors excited. So on that front, opening up the insurance sector, raising the FDI limit there to 74% would mean that for the underinsured market, there would be a lot of interest coming in from US and European investors. Bad bank to house the bad loans. And of course, the development finance institution has been reset up essentially to address India's growing infrastructure needs. And then a notable mention on the healthcare side, because healthcare spending has been revised higher, an allocation of about 140% increase seen for that segment, with $5 billion allocated for the COVID-19 vaccination program.